Good afternoon, ladies and gentlemen. Phenomenal stories have been linked to diamonds over the years. One that comes to mind is the Richard Burton Elizabeth Taylor story. The 69.42 carat pear shaped diamond, which Burton bought for over $1 million from Cartier and set into a magnificent necklace just so that she could cover her tracheotomy scar. And hence, diamonds will always be the ultimate gift of love to fill even the scars which have been left globally by COVID. Ultimately, the greatest lesson that COVID 19 can teach humanity is that we are all in this together. And hence, in this spirit, GJEPC has organized this webinar today between our eminent miners, Paul, Evgeny, and Rupaji from the government and the trade, Sanjay, together to discuss the diamond journey back to normalcy post COVID. Paul Rowley, to introduce our panelists. He's the Executive Vice President. He spent nearly 4 decades at De Beers, and Paul is a career diamandaire, if he'll permit me, Paul, and therefore the most qualified to discuss the future of diamonds. Paul started in De Beers' rough diamond division as a trainee diamond sorter in 1983 and juggled many roles before being appointed Executive VP, Diamond Trading in Feb 2018. With his entrepreneurial mind and a combination of skill and strategy, he has etched his name permanently in the history of the diamond industry. Paul, thank you for joining us today. Evgeny Aguri, a banker turned diamandaire. So Evgeny is an unusual combination where we have a banker turned diamandaire, and he holds a master's degree in financial management from the Moscow State University and the London Business School. His career has gone from working for more than 15 years in various Russian banks to selling diamonds. He quickly rose the ranks, and from being a director in the United Selling Organization of Alrosa, he took over as Deputy CEO, Head of Sales. He continues to lead the USO and oversee the sales unit. Thanks, Evgeny, for joining us today. Ms. Rupa Datta, and I always call her our friend, philosopher, and guide in Delhi, is the economic advisor for the Department of Commerce in the Ministry of Commerce and Industry. An economics postgraduate from Delhi University, she is in charge of the gems and jewelry sector. A praiseworthy quality of Rupaji, which we have noticed in our regular interactions with her, is that she is open to new ideas and believes in action and result-oriented schemes. One of her recent and biggest successes is her role in the implementation of the Common Facility Scheme for our sector. She also plays a key role in resolution of various procedural and policy hurdles affecting the gems and jewelry industry. And thank you once again for all your help, Rupaji, in these last 3-4 months post-COVID. Sanjay Shah. Sanjay Shah is a distinguished member of the GJEPC, spearheading the council's diamond panel. He is also a co-owner in KBS Group, one of the leading jewelry manufacturers from many years in this country. For the past few years, Sanjay has been deeply involved in policy-related matters on diamonds at GJEPC and is also a director in the India Diamond Trading Center. To jump into our webinar today, and just to set a little context to what this webinar is all about, our exports of cut and polished diamonds have slowed down from a peak in 2017-18 at approximately $24 billion to a low of $18.6 billion last year. And this year in 2021, we will have another, I guess, historic low because of COVID. And we are trending 45% lower than last year. So that's as far as polished diamonds go. On rough diamonds, we've had an import peak of $19 billion in our country, which dropped to $13 billion last year. And we are trending year to date in 2020 at 50% down. So during the 2008 downturn, financial meltdown, crisis, which the world went through and which maybe, I guess, all of us panelists and our audience today were, I guess, there at that time. Both the miners, De Beers and Alrosa, took different strategies to beat the downturn blues, if I may say so. De Beers told us at that time that diamonds have been under the ground for millions of years, and if they lie there for some more years, they will do maintenance of their mines, while Alrosa sold the mine diamonds to Gokran at the quoted prices, and Gokran created an inventory which gave them huge profits when the markets bounced back. So my question to the panelists, Paul and Evgeny, would be that what's your strategy going forward, and what is the overall outlook for the diamond business in 20 and 21 for the balance part of 20 and this financial year till 31st March 21? What's your outlook? So anybody, whoever wants to go first, Paul, Evgeny.
Do you want me to go first? I'll jump in there. Thank you. And Colin, thank you for, first of all, for inviting me to participate. It's always a pleasure. And like all of these events, I normally start by saying it's great to be back in India, but unfortunately, we're at least virtually back, which is as good as, I guess. Look, no one has a crystal ball. So let's be honest, we can't make forecasts about what will happen in the coming year with any great certainty, because let's be honest, we wouldn't have forecast COVID to have had the impact that it had. So we shouldn't profess to know what we don't know. But certainly I think the industry has responded very well, and not just from ourselves as a mining perspective and a producer, but I think across the pipeline. And that's the important part of this. It's about a collective response. Now, you asked what we were going to do. Well, I think we've demonstrated exactly that as we saw consumer markets initially in China close down, but then slowly across the world, and specifically the US, of course. Then, of course, likewise, we saw manufacturing, as things came back up the pipeline, slowly start grinding to a halt as closures came. And of course, on the back of that meant that we needed to curtail supply and take the necessary precautions. And as always with all of this, as we look towards our own companies and backyards, so to speak, we immediately took, obviously, our own employees and communities in which we operate and put them right at the front of what we needed to do, making sure we could make our operations as safe as possible. And then from a supply perspective, taking the necessary decisions to align our supply to demand, which is what we've always done, actually, for many, many years, is that we try and supply into demand, and we try and grow consumer demand. Now, obviously, over this period, as we've seen those consumer sales basically stop, we shouldn't underestimate that in China, we went down to minus 90% of sales. And likewise, we saw similar sort of trends in the US as it moved around the globe. Then of course, everyone had to stop on the way backwards as well. But I don't think it's all been negative. I think as we've seen that, we have actually seen ourselves and others grow to being able to deal with this pandemic in different ways and to cope with COVID, opening, closing, stopping, starting. We've seen it from the mines where I think we're in a good position of very good procedures in place to deal with that, all the way through to manufacturing in Surat, where we've seen companies, I think, really putting in safety first, making sure they got their factories into a good position. And of course, manufacturing dropping significantly when it reopened, but gradually starting to increase as polish sold through. And as markets reopened, what we saw was, in fact, the consumer very much desired the product. And what we've seen in the last quarter or so is that coming back. And I actually think that the stock pull through the pipeline has been quite positive. And as we start to see, as I said, Surat open up, but for ourselves, beneficiation as well, we are seeing factories starting to reoperate and sales starting to pick up a little. So as we look towards the future, which was your initial question, I think it's as a reflection of the past that the actual market is in a much better position. And I think coming out of that, stocks are down. Finance is actually probably in a better position as well. I'm sure we'll come on to that at some stage. That allows us to breathe and to operate into a new normal. And I think we're creating the agility to deal with that.
Thanks, Paul. Evgeny?
Good afternoon, ladies and gentlemen. And first of all, I would like to start that I hope everybody are safe and healthy. And Colin, thank you for invitation for this interesting discussion today. And I will start with information of what we as a company, we did in 2020. So irrational behavior and price over volume approach allowed the industry to keep prices stable. And Alrosa took a hit, allowing customers to postpone purchases and letting the industry destock or avoid excessive stocking. We are committed to supporting our clients, and for the April-July trading sessions, Alrosa offers maximum flexibility to its customers. And Alrosa doesn't set an obligatory payout limit, allowing its clients to keep off the trade if they want. Deferred goods will be offered during future sales periods. Clients interested in purchasing rough diamonds are free to request them and get the goods they need. So we keep our prices stable from February month, reducing our sales volumes. That was our strategy, and we see that it was right and very responsible approach. Regarding the outlook for the rest of this year and maybe next year, for sure it depends on a number of the factors external to the industry, like second wave, like trade tensions, like speed of the key economies recovery, financial situation at the midstream, and number of others that can possibly delay the market recovery. All being equal, we expect that supply will decrease quite strongly in 2020, down from 137 million carats in 2019 to 110 million carats in this year. And with the limited growth of the production, provided demand will be gradually returning back. Supply growth in 2021 will be impacted by the closure of Argyle and a number of other smaller assets which come to the end of their mine life and continue to struggle with the financing issues. Regarding our outlook on midstream, so midstream will be gradually restocking in 2020 as confidence of the midstream has not returned yet, as well as situation with the anti-COVID measures is another roadblock to the return to the business as usual mode. As for the next year, 2021, provided end consumers demand continues to recover, the midstream will stick to the lean inventories management. So another trend that should become more pronounced is the consolidation of the midstream, with smaller players leaving the market while remaining taking the market share, as profitability for the midstream could be ensured by scale of the operations, which can help to find additional pockets of value through cost cutting, access to the market, possibility to support digital trade. Regarding the outlook on retail, so as demand for the diamond jewelry will decrease by almost 25% this year, and this decrease came unexpectedly for the retail as well, who was preparing for demand recovery in 2020, which means that retailers before the COVID eruption were holding adequate levels of stocks, and after the lockdowns introduction, this level of jewelry stocks was more than sufficient to feed decreased demand. Retailers keep relying on their existing stocks in 2020, and we believe today they will have to start to restock. So in other words, by year end, retailers will have to restock. But we believe that the magnitude of such restocking should not be very sizable this year. In 2020, restocking should rebound to the jewelry demand in 2021, most likely will be only its way back to the levels of 2019. And also, we see that a lot of market participants, they think that demand for the luxury goods could return only by 2023. So, and we see that as well with growing, will grow the share of sales through online platforms. That will be also a new trend in our industry. Thank you.
So thank you. So just to recap what the two of you all are saying is that we are entering a new normal. The markets are better than what they seem. China has recovered a little bit. But having said that, you all still see retail down by 25% and maybe a long term before it comes back. And I guess you all are going to have more flexibility for your customers. in terms of them having ability to defer sites and manufacture goods. Right. So having said that, and I guess Evgeny, you touched upon I guess the midstream a little bit. So I would jump into asking Sanjay this because he's right in the middle of where the whole midstream of India is. So Sanjay, how is the demand and prices of polished diamonds? Because Sanjay fortunately is a large buyer of polished diamonds also. So how has the demand been the last few months? How has pricing been? And based on your interaction with customers and I guess our other members who also have been talking to us, what do you think this Christmas looks like realistically?
Good afternoon, ladies and gentlemen. Thank you for the invitation. So basically, if we talk about past few months, from middle of March till middle of May, there were no exports. So 2 months, there was no exports. India started exporting by middle of May. And here I must acknowledge the efforts and the bravery of custom officers, custom staff and BDB personnel to have come back to work in spite of health hazards and threats to ensure the country's export take place. So when the export started, only one center was open with a little bit of demand, which was Hong Kong and China. Last 3 months, no sale by the midstream, only one center open, oversupply of polished diamonds and little demand. So industry saw a price correction of 10 to 15% around that time in the month of May. In June and July, because of the restrictions laid down by the local authorities of social distancing and the other norms of decontamination, the production was only 25 to 30% of the full capacity. So therefore the prices recovered a bit and there was shortage was felt in certain areas of goods. But I would like to say here that there's some part of inventory which there is no demand, and it is, according to me, is a cause for concern. Now going forward, I would take these three countries example, USA, China, and India, which constitutes about 70% of the world diamond demand. As far as USA is concerned, the fiscal stimulus and the $600 paycheck per week ensured the wheels did not come off. Almost no business was transacted in March, April, and May. Some sales started picking up from June onwards, and the retailers started opening doors. One keynote, which I'm sure everybody knows, that retail footprint has already started to close. There will be few companies, department stores going out of business, and existing retailers reducing the door sizes. And all this is probably will increase post holidays as the retailers adjust to the realities of consumer buying. The burden has increased perversely even more on the manufacturers as retailers want to preserve cash, and there is emphasis on memo or only memo. So this is the the observation from the side of USA. And as far as China is concerned, I've heard that I read it somewhere about 20% less in the retail demand. The B2B business should pick up around September till January as the buying for the new year takes place. While US and China are showing signs of some improvement, where Europe and India is right now is struggling. What we hear about the jewelry sales is mostly in gold. As far as diamond sales are concerned, it is not picked up yet. So realistically speaking, I feel by Christmas, B2B and the wholesale business should be down by approximately 30 to 40%.
So Sanjay, you think business will be down 30-ish, but there is a shortage of select goods.
In some areas, but there is in some areas the goods are not simply not moving. So it's a very unique situation that we are facing month after month.
So having said that, Paul and Aguri, what happened is a few months back in March when the lockdown happened, is industry in India obviously sat together and we did several meetings. And one of the worry was, especially with the lockdown measures and partial opening of factories in Mumbai and Surat, which are the main hubs, everyone's worry was that if there is new rough imports done at a significantly low price by, say, a few players, then that would make the entire market go into some kind of crisis. And And the number one worry, I would say, for the entire industry over here was cash flow, because payments were stuck, as we all know. With the entire world being in lockdown, there were no customers paying. Inventory levels were high because of all the imports which had happened in Jan, Feb, March. So there were a lot of goods in India, and cash was king. So having said that, the council and a lot of bodies got together and appealed to our members to do this voluntary ceasing of import for a few months till inventory, came back to normalcy. Cash flow became steady or stronger, I would say. And the inflow of roughs into the factories and the market, anyways, with lockdown and with the measures being put in place, would have been a reduced manufacturing activity. So would like to know your views on on this particular decision which happened on the India side. Aguri, we can go with you.
Thank you, Colin. We were quite informed about this decision, and I can say that this crisis this year, 2020, it's the situation quite different, like it was maybe in previous big crisis in 2008, and the major players in the industry, they're responsible, and they followed and will follow responsible approach. And from this point of view, for us, it was absolutely clearly understandable that we should to switch to price over volume strategy, and we should reduce allocation of rough goods. We should support midstream, and I think that also this year main players, they are quite good prepared for this, because thanks to the situation last year was our local crisis in our industry, and linked with the overproduction issues. And during 2019 we solved this, I mean, as an industry, and at the end of the last year, beginning of this year, the whole midstream was in quite good situation from the inventories point of view. Talking about Alrosa, we have financial reserves. We increased our liquidity in the debt markets. So, and from this point of view, we followed this responsible approach, and we will follow this approach. I mean, only demand-driven decisions. And from this point of view, we, from one side, we agree with the decision of GJEPC, and we support this. From other point of view, I think also major miners, they provided confidence to the midstream, confidence to the industry, and I think it's like win-win situation from this point of view. Thank you, Colin.
Thanks, Aguri. Paul?
Yeah, thanks, Colin. Look, I think, to be honest, I think the industry was as a maturity that realized it needs to respond effectively across its pipeline, and I think it was already doing that. Yevgeny referred to last year. Last year was a difficult year in itself for the industry, not on a global problem, but an industry-specific issue, which I'm honest, if I think of May, June last year, was specifically tight, and we took a relative response to that as well, where we follow the same strategy as we have done this time and in the past, which is we'll supply into true demand, and if that true demand isn't there, then we'll make adjustments accordingly, and that's exactly what we did. So we were already well down the line of readjusting and giving all full flexibility. We'd announced that well in advance of the announcement coming out of the Gem and Jewelry Council. So I think on the one hand, the response is a similar response. It's everyone realizing that there's no point in manufacturing products that are going to get stuck and not sell through, and there's no point in supplying into manufacturing if that manufacturing is closed. And so consequently, I think we're all of the same belief. I just think that the industry doesn't always need a regulation to do that. I think it's got the maturity these days going forward to to ensure that it operates in its own, I say, demand and supply mechanisms that enable it to do so. If anything, I think post the announcements, I was probably inundated with more requests for rough than I was beforehand, but for the wrong reasons, as I would put it. And I think it's clear to see that we didn't respond to that. We were very much around the fact that we do believe that manufacturing needs to pull, and we wanted to supply into that true demand. As I said, that would be a reflection then of consumer demand. So throughout the process, we've put all the flexibility we have put in place to assist our specific site holders, but I think also the broader industry as well, in ensuring that we come out of this, as I said, collectively in a stronger position.
Thanks, Paul. Thanks, I believe. Sanjay, your views on this particular?
I would like to say, a lot of events took place in the month of March. So India declared nationwide lockdown. Customers and retailers across the world suspended and canceled their orders. In USA, retailers started closing doors, shutting down all points of sale. All manufacturing factories in Surat had come to a close. We can say entire diamond and jewelry activity came to a grinding halt. Therefore, prominent industry leaders with all the trade bodies came together to at least discuss and see what can be done, and any drastic steps needs to be taken. The impact of this pandemic at the world level was so large that it was a general understanding that it was important to safeguard the value of our inventory, as the impact would be very large at the retail level. It was estimated that the value of the inventory was estimated that India is holding about $6 to $7 billion. With major points of sale being shut across the world, there would be a huge impact on the demand of polished diamonds. It was also very important to convey this message to a larger spectrum, to small and medium-sized enterprises who might not be aware about what is in store in next few months. So it was at that time GJEPC took the initiative to start the dialogue with cross-section of the manufacturers. Several virtual meetings were held during the nation's lockdown. And it was a general consensus that it was important to withhold further purchase of rough diamonds immediately and move the existing inventory of rough and polished down the pipeline. Finally, it was decided, along with BDB and the 3 other prominent organizations, to appeal to the trade to curtail the import of rough diamonds for a month and review the situation at the end of every month. And here I must say the Indian industry acknowledges the restraint shown by, like you said, De Beers and Aluza, by allowing full flexibility to their clients. If I look back, how did this pan out? It was probably a very good decision that the Indian industry took, which served the collective good for the entire gem and jewelry industry, from the mining countries to the end consumer. How? It fundamentally achieved the following: mind space, solidarity, and courage. The feeling of we are all in this together, as Colin said. The industry has never seen an event like this. This took away a lot of fear and put people at relative ease. It preserved short and long-term value. It prevented a mass exodus from sell at any cost to I can write this out. Let me get the most of my stock versus sell my stock at any cost and exit the industry. It also gave the retailers a sign that prices will relatively hold, and no low-ball offers at this restraint set the tone for them to focus on their business, knowing they do not have to worry about a free fall in the diamond prices. And lastly, it also kept negative press at bay. Relatively falling prices and panic selling would have been picked up by the media and made the consumers even more reluctant to buy diamonds. Good decision at the end for all the stakeholders involved.
Okay. Thanks, Sanjay. So to recap what I guess all of you all have said is that even for the remaining part of the year, we will see price over volume as a fundamental, I guess. Demand will be driven by decisions where it's win-win for all stakeholders. Like what Paul, even you said, is that the true demand will force everyone to make adjustments, and then accordingly the pipeline will only have goods which are demand equal to supply kind of situation. And so further to that, and this is a clarificatory question, but from a lot of our members, especially on the manufacturing side. So the flexibility that we've seen in this year so far, are we saying that we'll continue with that flexibility till things come back to normal? Is that what we are saying? Paul, Aguri, anybody can.
I'll jump in. Look, I think from a flexibility perspective, I think it's important to be there with that flexibility. I think otherwise, how do we ensure our sustainability? So flexibilities will change. That's flexibility itself. Yeah. So I think we need to adjust accordingly, be alive to the situations. Markets change, dynamics change. I recall, interesting enough, I was in Surat just before close down, literally, as I was seeing our customers there to understand how prepared they were as COVID was coming through the system. It was interesting at that stage, there was still very much a degree of optimism that goods would be required and more concern about how we could supply those goods into those manufacturing. Now, the rest is history, of course, and things change rapidly. But I think it can go both ways in that, and we need to have that agility to be able to respond appropriately to the market dynamics. And we're already starting to see a little bit of change, and I think that'll be important to continue to be flexible in the approach to meet the dynamics of the midstream, which again needs to be ready to meet any consumer pull that I think will come potentially a little later in the year, as we've heard from Sanjay. We're already seeing some of that.
No, Paul, to clarify over here, see, now we've had this lockdown and this voluntary cease, and due to that, we all agree that Polish prices have stayed stable.
Yes.
Now, if the flexibility continues and our members on the India side have this flexibility to import how much rough they need, what they need, then we have pricing stability. But if they're contractually compelled to buy more than what they need, then we'll see a Polish price correction. So the question is that will they continue to see flexibility this year, just this year?
I think that's what we've said, that throughout, from a De Beers perspective, we've had flexibility throughout, and the same as we did last year, and the same we will do in continuing years.
Okay.
If we're a leader in the industry, and as one of the leaders of that industry, we need to ensure that we play our part throughout it. And I think the past history has proven that. So from my perspective, it's just that how that flexibility is applied needs to be relevant to the changing dynamics of the market. And we're not saying, as I started off on this conversation, we don't have a crystal ball, so we can't say what that will be.
Okay.
But we need to be very much in touch and tactile with the market dynamics, and they change. And we're starting to see some of that change now, and we'll adjust accordingly as we go through it. And vice versa. I think it's a very different space today. And I think that's what the new normal will give us, is the ability to, as I said, it's a stop-start business. We'll need to adjust our pipelines, our way of selling, whether it's from rough or whether it's polished or whether it's at retail. We're seeing a really new, I think actually potentially exciting dynamic. It's not all negative. We should stand back and see what the opportunities are coming from it,
Okay.
but see in a different way.
Okay, Evgeny?
Yes, thank you, Colin. Thank you, Paul. I would like also to add here, and I think everybody wants to come back to the normal. I mean, normal style of work, normal style of life, and from this point of view, it's a question of timing. I mean, how fast this recovery will be, and it's from other side. But from other side, it's very important to follow and to support this recovery from small steps and in a responsible way. Not to, for one side, not to overforce with the volumes, and not to gain short-term gains, but to have a mid-term and long-term strategy, and to support the increase for next month and next periods. And from this point of view, we have to, as I have mentioned already, we will have to take only demand-driven decisions. And also, it's important in our business, and it's important message to the industry that we as a company, we work on possible government support to our company. Gohran, the Russian governmental depository, will buy. We we wish that finally the government will take this decision, so the Gohran will buy one portion of our stocks, and from this point of view, government will support Russian government, not the Alrosa, not the company, but the whole industry, because sufficient portion of stock goods will be out from the market for next period of time, I mean, couple of years. And from this point of view, it's also this situation should support the overall balance.
Evgeny, one question, and it's just come up, from somebody in the audience, is that will Alrosa allow a deferral for the month of August, or will Alrosa allow a deferral for the month of August? It's a question which just came up.
No, yeah, it's commercial question. We this week will announce regarding the rules for next August trading session, and but I will guarantee that we will support the industry and.
Okay. So you will come back next week. Anyways, thanks. Thank you, Paul and Evgeny. So further to, I guess, the flexibility part, and don't shoot the messenger. I'm only asking you all questions which have come from our members. But what they all want to know is pricing. So, while flexibility and I guess, Evgeny, you said it, price over volume. So I guess that was very powerful. And the question is that, while we do all agree that demand will always decide the pricing, but obviously there is going to be a correction in demand. So are we going to maintain pricing with control of supply, or are we expected to see price corrections? So it's a tough question. It's I understand, but would like to know your viewpoint.
And Colin, I mean, you're aware we can't discuss pricing.
Yeah, I know.
We're not in a position to do that, so we wouldn't venture into that space. I think what we've said throughout all of this, thinking of Sanjay, and as you said, as we looked into polished sales, I think there's a number of things we have to look at. We tend to talk of diamonds, but actually we need to segment that product a little bit. Different products move at different times and have different demand pools. Certainly in this COVID situation, there's no doubt that certified goods have been in a better position to move through to polish through B2B and into retail. And of course, from a manufacturing perspective, it's been the quickest to recover as well. And we're seeing different dynamics coming through. So I think we have to look at the industry, not just in a broader sense, but in specific products and understand how they're moving. I think what's really been encouraging is, and I agree with Sanjay, that we didn't see that big crash of prices that some people were fearing. And that's because as an industry, we responded well to the crisis, and we believe in our product. And I think that's what's really important about all of this, is that we've got a strong future ahead, and that future is positive for diamonds. That we see good consumer demand returning quite strongly, in fact, in the US and China. I agree on India's being a little slower, but each country is coming out of it differently. So as we go forward, I think we have to look at matching supply to demand and taking the right, as we reopen, taking the right decisions appropriately to the time. And that's where I think we need to look at going forward. But I come back, I think the encouraging news out of the US is that after initial slumps, there's perhaps a better than expected recovery to some extent. We're not to where we'd like to be, of course, but I think we're certainly seeing some good pull through, and likewise in China. And if we look at the reduction in supply to the market at the moment, as I said earlier, I actually think the stocks in the pipeline are in a much better position today than they were certainly this time last year even. So coming through that gives us confidence into the future. And in fact, if anything, I think we just need to make sure that we're able to respond to that consumer demand, because ultimately, and I think we're seeing that now, as I said, the market does change in its dynamics, is that we are feeling that pull, and we are starting to see some gaps, and we are starting to see some recovery in polished prices in certain areas as well, where we've seen some good appreciation. So it is that, you said, it's a demand supply mechanism, and that should be allowed to play through, and we monitor it very closely. So we can't say anything on price, we never would, but we will continue to take, as I said, our flexibility and our support for the industry.
Okay, thanks, Paul. Evgeny?
Yes. Thank you. I would like also to add, and regarding the prices, during April and the May period of time, we saw on the market some of deals with significant discounts. I'm talking about the rough diamonds with minus 35%, minus 30, and that was mentioned like a new reality, new pricing level. But situation changed, and based on this price over volume strategy, today we can see on the market, based on the tenders and the price correction is about minus 10%, maybe minus 15 to last levels. I mean, to the February and March, and that is the result. I mean, the situation is moving in the right way to be normalized. From other side, also I would like to mention that world has changed, and now we see broken logistic. We see that for the shipment we'll need more time. We see that it's not easy to work in our regions. I mean, to organize the trading session with in Moscow, for example, because people are not able to travel, and in Antwerp it's also not easy to make the shipment and to bring the goods. And from this point of view, also we have plus to this all these necessary measures to the midstream. I mean, for the manufacturing and social distancing and all these rules. And from this point of view, the picture is very complicated, and now it's not so. The world is not so linear like it was before. Like just price reduction will easily bring the margin to the sector. It's not like this. It's a question of to make this complicated picture more efficient, and the same we see from the retailers, because there is delay with the new contracts, and we expected that the new contracts midstream will receive in June, July. Now finally contracts started in August, and also retailers, they have to understand that now it's situation is not so moving, is not so fast like it was before, and to manufacture the contracts midstream will take more. We will need more time for this production. So again, situation is very complicated, and it's not so linear formula just to reduce prices and industry will restart.
Okay, so situation is complicated. Demand will be sporadic and specific. So decisions on pricing, supply, I mean, obviously everyone will be, take what's in the best interest of the industry. So I'll leave it at that. And Sanjay, coming to you, is so further to what I guess Paul and Evgeny both have said, is what do you think, considering you're in BDB and we're talking to diamond manufacturers, traders, I guess everyone across the pipeline, now that inventory levels are low. Okay, inventory levels obviously are low because manufacturing has been subdued. We do see that there should be some kind of margin which comes back to the business, hopefully, because everyone's producing less and selling less, and people will do that in a little, I guess, mature fashion.
I'll define that inventory levels are low. I feel the inventory by not importing from month of April onwards for about 2-3 months, the industry has been able to reduce the inventory by about 15%.
Yeah. So Sanjay, my question is
inventory, which is which turned out to be the right decision.
So my question is that do you see consolidation? Do you see reduced business? Do you see margins coming back on our side? Or do you see everything happening?
There is no doubt that the industry, I would hate to say it, but it is going to shrink this year. When everybody is accepting our exports and import figures are also about 40% plus minus less. So there is no doubt that the industry will shrink. Talking about consolidation, it only happens. The one major thing is very important, that there has to be a demand. When the demand picks up, everything else comes into place. As long as there is no demand or there is no visibility or uncertainty about demand, it is very difficult to visualize or envisage what to do next, what steps to be taken. But commonly what I've heard in last couple of years, or let's say last few years, that the margins in the midstreams are under tremendous pressure. Industry is working at a very high risk and low returns. This is a general, I would say 70-80% people would say the same thing. And the Indian diamond industry and jewelry industry has been trying now at untenable risk for too long. This is a general perception and the view and the opinion. The Indian diamond industry, and we have invested most in the business. And now we all have realized that we need to be more profitable to be able to continue. Now, when the inventory goes down, there's a good chance, that the whole midstream should make an effort to make the activities profitable. And to add to this, we adhere to every international norm, regulatory requirement, making sure our people are taken care of, and supporting massive infrastructure. I hope, I can, tell the viewers also that the mindset of the midstream is changed now to being sustainable and take those steps that ensures business continuance, and then make informed decisions on facts versus emotions.
Okay. So having said that, Sanjay, I guess we're all coming to the conclusion, more or less, that at least the midstream has not really made money in the last few years. Okay. And having said that, the confidence with banks is low. Because the bankers are finding, the business not so sustainable, profitable, or within all the norms. If you take, even the rating agencies have taken a hard stand on our industry. So having said that, and Paul, Evgeny, and, I guess, Evgeny, you've been a banker too. And Paul, you've been part of this trade since the last 4 decades, and you've seen it through, I guess, various ups and downs. So I guess, and a lot of manufacturers, I must share with you, in the last few months, large ones, are saying that they want to become debt-free in the next couple of years. Private sector banks are not too positive with our industry. Public sector continues, thankfully, to support us. But what is it that all of us could collectively do to make sure that this business stays profitable, sustainable? Any advice, Paul, Evgeny?
Look, I
And
think
we have a lot of bankers today who are viewing this, so they really want to hear from you.
I'm sure. And look, I think it's like many things. I mean, we tend to isolate ourselves in the industry, and we have to look at what's happened over that period of time in general. What I think has, if we look at the last decade, we saw a tremendous increase in the utilization of debt. I mean, at its peak in around 2010-11, we were sitting close to somewhere at the high 13s, $14 billion, but less than half of that today now. We've seen a dramatic, you're right, to the point of some customers really looking to really get their finances into a correct order, I would put it, and really working on that. And I think COVID has actually accelerated that process. We saw it happening last year. We saw a lot of changes. You'll know that from a De Beers perspective, we've been discussing for the last 5 years around financial transparency and compliance, all of which is to make our industry bankable into the future. And I think the industry's been on a trajectory. If anything, I think COVID has, in fact, improved the financial strength of the business, in that I come back, stocks are down, debts are down. I think the overall industry from a foundation perspective is looking in a stronger position on which to build than it has done for quite some time. It's important that we make sure that those foundations remain robust and that we continue to improve that confidence within the banking fraternity, because I think businesses have really come a long way actually in the last 2 to 3 years, and I think we're in the right direction. And I come back, stocks down, debt down. This is a much better position to be in as we look to start a recovery, and a recovery that I think we're not expecting a V-shaped recovery, but certainly recovery will come, and we should be positive in that perspective. And I think the banking and non-financial, non-direct banking financing of the industry should also be positive, which we've seen increase over the years. I come back again as well. I think every business is different, and I think we tend to look a lot at the industries, and it's true that we are an industry, but businesses operate differently, and we've seen a big change over that period of time. And I think businesses come and go. It's a reality of life, but I think as I look to the future, I look so with a a cautious confidence, to be quite honest. I don't want to be too bullish because obviously we've got a long way to go, but certainly I think in the longer term, we're in a very good position.
So would you, Paul, tell all our banker viewers that industry is in a better place today than it was 3 years back?
I think it is in a better position than it was 3 years ago, without a doubt. In my opinion, there's no doubt about it. It may have been painful over the period at times, that's for sure. But coming out of the other side has been certainly a fitter and stronger business.
Okay. Evgeny, you as a banker?
Yeah, I absolutely agree with Paul, and so I can say this trend for the last three years. I saw it because I joined industry exactly 3 years ago in August 2017, and first thing what I did, I tried to understand the financial side of our clients, the whole industry, and for me it was much less transparent situation as it is right now. And I think thanks to this crisis, if I can say it in this way, we see that a significant number of our clients, they increased the financial discipline and they reduced their debt. They normalized their receivables. Also, we can say that we have not faced significant bankruptcies during this period of time. Maybe that will happen, but I wish not. And so from this point of view, I will agree with this, that now the industry is much more better from financial side. But from the new investments and how our industry is attractive for banks, also, I would like to say that industry is attractive, and there are newcomers, and we know. So last year, one of big international banks started to provide financing in Antwerp, and it's Rosexim. It's part of international Exim group, and it means that there are newcomers, and I think from this point of view, industry is still attractive and profitable.
Okay, so I guess message to all our bankers, both the large, I think, godfathers to our industry feel that the industry is in better shape today than 3 years back, right? I mean, lower debt, better inventory level, better receivables, more bankable than it used to be. That's great to hear. So coming to you, Rupaji, and sorry that took some time to, I guess, come to the government part. But Rupaji, the government and Reserve Bank of India have been extremely receptive to the situation and have brought a slew of measures, I would say, in the last 3-4 months to ease off the troubles of the Indian diamond tariffs with extension. So a big thank you for everything which has been done, and your department's personal efforts, like we know, continues every day. But still, there are some small issues persisting, especially on the part of the private sector banks when it comes to listening or following the RBI circulars in the letter and spirit. So, any your take on this issue?
Thank you, Colin. I just wanted to say that this is an issue which has been discussed quite in different forums about private and even with the Department of Financial Services of Government of India, which looks into the issues pertaining to banks, and you were also present in those meetings. We, from our side in commerce, understand that the need for the right kind of availability of working capital and ensuring that the loans and all and are available in time, and the present times you have got a lot of extension in time limits and moratoriums. We are from our side definitely trying our best to talk to the Department of Banking and see what can be done, and we would require a joint effort by GJEPC and us to move this ahead. But the issue is with private banks. Sometimes government can only give them instructions, but cannot really ensure compliance. But we will definitely work jointly and try and see that the financing issues are sorted out in a better manner. I know some improvement has happened. Let's hope that things continue to be better in the near future. Thank you.
Thanks, Rupaji. And further to that, Rupaji, like you know, and I guess since many, many years, the council has made representations to the government on direct sale of rough to India by the miners. And we've been asking for this turnover tax so that it becomes easier for miners to sell directly to our manufacturers in India. More and more miners are coming through, our the rough auction platform at BDP, and but they are not able to sell directly because of the taxation issue. We've started one in Surat also, and we've been appealing to the government. And I thought today we'll take this opportunity to let our two I guess largest miners to this industry since the last I don't know many decades, to impress upon the government how this could fundamentally be very much in India's interest and could help the SMEs, the small medium-sized manufacturers to grow and even reduce the cost of business for the large manufacturers. So Paul, Evgeny, anybody, whoever wants to go first.
No, look, I think from my perspective, it's like obviously the lease regulation is always easier for everyone to operate within, so we would encourage that. We're open to that. We've shown tremendous flexibility over this period of time of trying to move products around. Obviously, our home is still very much in Botswana, and that's where we anticipate selling the majority of our goods. But we have a flexible system as well through auction sales and what we call a buy platform in these times as well. So we look at the flexibility throughout. I think anything that can assist flexibility in this industry and allow quicker movement into product will always be good to everyone. And certainly as we look at technology going forward as well, these are all opportunities. So certainly it would be appreciated, but we have obviously a well tried and tested selling mechanism in place that we still strongly believe in. It's really set as well, and that relationship is very important to us. So we'll continue in that aspect, but certainly to have flexibility, yes, please.
So further to that, Paul, and I wanted to take this opportunity where maybe you can even tell us a few words on how important is India in your scheme of things?
It's very important, of course it is. There's a huge amount of products are both manufactured in India, and it's an important, as we heard earlier from Sanjay, it's an important and potentially very growing, I think, as we see the middle classes coming through consumer markets. So tremendously important, but also for us, of course, is beneficiation countries in which we operate with our partners. So we have a very mixed model. But rest assured, as I've said on every trip down to India, the success of India is truly connected to our own success, and the more that we can ensure that continues, the better. We're very supportive, and a great number of our club customers come from India, particularly manufacturing. So I think, without a doubt, we are interlinked and will continue to be so. But at the same time, of course, as well, we're seeing that business also flexible in Indian companies operating out of beneficiation countries, and also, I dare say, spreading their risk over this period of time has been very positive for many, that they've been able to have different geographical footprints, which have allowed them to operate at different times. So I think that mixed model and anything that can encourage that for our industry is really important. But today, India is very important, as it will be tomorrow.
Evgeny, thanks, Paul.
For sure, India is very important for our industry, and we see that already were taken quite good decisions to organize the direct sales with the start of special notified zone at the bourse, and with the right international taxation rules. And from this point of view, I think that Indian authorities, they can continue to develop the trading infrastructure and for some convenient conditions to develop the trade inside India. And from other side, also we see that there is a growth in the for the international business, and in Russia already some of Indian companies, they opened factories, and there are also some special taxation zones, I mean, to start the business. So from this point of view, it's mixed model.
Okay. So having said that, Rupaji, you've now heard from the miners, and what's the government perspective on when can we or should we expect this turnover tax in special notified zones for, you know, eminent miners?
Thank you, Colin. I'll first start by saying that, you know, the entire perspective, of course, the mining companies have given, and you and Sanjay I have given, but let me also emphasize that this sector, why you know, Department of Commerce is so deeply involved in this sector, is because it's very critical from our export basket point of view. It forms about 12% of our exports. It contributes 7% of GDP, and about 5 million people are working. It's a hugely labor-intensive sector. And of this entire gem and jewelry basket of portfolio, cut and polished diamonds form about, you know, like out of 40 billion, it was about 24 billion during the year 2017-18. But unfortunately, as all have mentioned, that global markets have really been deeply affected by the COVID pandemic. And there has been, for the period April to July, the diamond export specifically has shown a 60% decline. And it's still diamonds, cut and polished diamonds are still about 63% of our entire export basket. So it is a critical issue, and from Government of India, we will definitely take all steps and try to see what are the innovative ideas we can think of for promoting exports from this sector. Now I come to the specific issue which you have mentioned. The special notified zone was established in the Bharat Diamond Bourse in Mumbai in December 2015. The whole idea was to help the diamond miners to bring rough diamonds on a consignment basis and provide access to the small and medium Indian diamandaires who were not able to travel to Dubai, Antwerp, and other areas. And another SNZ has now been established at Surat. We do know that the SNZ facility is being utilized only for viewing sessions for rough diamonds by the foreign mining companies. And then these rough diamonds are exported back, and e-auction is conducted from other diamond trading centers such as Antwerp and Dubai. Now, the point which you are raising, and which we also feel that would help in promoting exports and improving the sale from these improving the prospects of the sector, is to encourage the diamond mining companies to start auction or sale of rough diamonds in the SNZs. So there is a proposal for introducing a special turnover-based taxation system on sale of rough diamonds at SNZ. At rates of taxation which is reasonable and which is in comparison with other diamond trading centers. This issue, we in Department of Commerce have already, the final call in this regard would have to be taken up by the Ministry of Finance. The issue which is coming to the forefront is Ministry of Finance, because it's mainly a taxation issue. So the Central Board of Direct Taxation, CBDT, would have to take a final call. We have been following it up with the Ministry of Finance. We have sent a series of communications right from our Commerce Secretary to even our Minister, Honorable Minister level. And we are trying to have some more interactions, preferably meetings to discuss this issue. The problem which is coming out is what is the proposed rate of taxation. So the turnover taxation system, which the rate which industry is asking for and the rate which government thinks is just and appropriate, there is lack of convergence on this matter. This is what this is what is kind of, I won't say causing barriers, but it's impeding the issue from taking it to a closure. So what we need is have a detailed discussion, which we are trying our best to have. We have been following it up for the last couple of years, but I'm happy to say that it is now gaining a lot of traction, and probably in the present circumstances we can push it a bit further. So once, if and when it happens, and we will try our best from the Department of Commerce to take it to a logical conclusion. this would definitely, I think, be a game changer for the industry, and it would help in ensuring easy and cost-effective supply of rough diamonds to the Indian diamond industry, especially for MSMEs. So I can only say that all efforts are being put for this, but both sides have to be a bit more open to the idea of, how do I put it, open to the idea of rethinking in terms of the rates of taxation, the turnover tax rate. So both income tax, both Department of Finance and the Income Tax Department and the industry have to move towards looking at a kind of, where there's a convergence happening. So we will definitely play in Department of Commerce the role of a facilitator as far as possible. And I feel even initially when the SNZ was set up, even display of diamonds was an issue which took a long time to get sorted out. And once the SOPs were in position, the SNZ is flourishing, I would say. So let's hope that we can achieve a sale for the sale in SNZ.
So further to that, Rupaji, what many of the miners have been asking us is a clarification on this online equalization levy for B2B international diamonds. So what is the view of the government on this? What can we expect? Because I guess the essence of this levy was to tax companies who were selling B2C, and miners is a B2B business. So with a 2% online equalization levy, actually it is a disincentive for doing online business. So does the government have a clarification or view on this for the miners?
But Colin, I understand that you have already, because this is again a purely Ministry of Finance issue, and this was mentioned in the budget of 2020. I understand that GJEPC has already represented their apprehensions to Ministry of Finance, and this has been flagged even before our Honorable Minister. So we from our side also have also requested Department of Revenue to examine the matter. But I would suggest that we, both of us, you also from your side and we from DOC side, try to push this as far as possible to get a clarity on the perspective of Ministry of Finance.
So another perspective that okay, thanks Rupaji, from the miners. So a long-standing demand of I guess the manufacturing industry in India has been a reduction on the polished diamond duty from 7.5 to 2.5. And in our discussions with the government and even in the trade, is that since we are net manufacturers, why do we need this duty to be reduced? When India is not such a large market for polished diamonds. So I wanted the miners' perspective on this, and maybe you can help us explain what the trade needs as to why trading or import of polished diamonds is important to make even manufacturing in India viable. So that's what the trade wants. And Paul, Evgeny, your opinion, and Sanjay, then we'll come to you.
Maybe it's more easy to answer for Larosa, because part of our business in our group, we have a division responsible for polished goods. And last year, Larosa acquired the biggest one factory in Russia, Smolensk Crystal. And from this point of view, we increased our polishing business, and I think that and from this point of view, we will agree if government will decide to reduce polished import duty to these levels, because from this point of view, that will support for us the new market. I mean, we'll be able to sell the polished goods in India once our clients or the market will need these goods.
Okay, Paul.
Yeah, thanks, Colin. It's probably more a question, I think, for Sanjay will give us a much better response than I could. But look, as I mentioned earlier, of course, India is a big manufacturing center, but there are also a number of Indian companies that have manufacturing operations outside of India, including, for example, in beneficiation countries. I know what they would like to do as part of that process is to amalgamate their polish into a center and utilize that as ability to sell through. The import duty would see them not doing that and choose other centres in which to do so. So I come back, you know, it takes away some of the flexibility and the dynamism that's required within our industry, and people have to make alternative options. So anything that can reduce that and make trade more free and flowing, I think is a good, strong positive for the industry.
Sanjay, you're on mute.
I would put it in a very simple way. You know, when we think about perfume, we think of France. We think about watches, we think of Switzerland. So when we talk about diamonds, this is a golden opportunity for India to become a diamond hub. When I say diamond hub, means manufacturing, distribution, and trading. So I think 80% of the world's diamonds are processed and manufactured here. 20% which is outside India, out of which 70% beneficiation factories are owned by Indians. So India is already a manufacturing hub. All these diamonds which are polished outside India, when they are brought into India with a much reduced duty that we are proposing, then we can easily become a distribution hub. And this is the reason, one, the government, you know, now is the opportunity. This is, you know, like taking away business from all the trading and distribution centers. See, imagine one thing, why we have to buy from a trading country where we are going to consume as an Indian on our own. So if you think about the larger picture, then I think it is a simplest form. I'm not saying that, you know, I think it's the industry's view that reduction in duty. Just imagine the goods which is produced and manufactured outside India, they go to Hong Kong and Dubai and they sell it cheaper than what it is costing to Indian manufacturers. So it is very difficult to distribute also. Once we get the goods here, when I'm talking about a distribution hub, all the orders, all the major customers would make India as a stop, and eventually, I'm 100% convinced that it would get greater revenue than what we are at 7.5%, more revenue by reduction in duty by 2.5, because that much more business will increase.
Okay, thanks, Sanjay. So I guess thank you, everyone. I think it's been a wonderful last 1 hour, well spent on all the issues that I guess our industry faces in this, I guess, very unusual times. So over to, you know, I guess one by one, all our panelists, you all have all been with this industry, including you, Rupaji, for many, many years. So what would be your message to the viewers today? We can start with you, Rupaji.
Colin, before I give my concluding remarks, I would again reiterate the point which about this reduction of duty for cut and polished diamonds. I think you know the issue, and I appreciate what Paul and Eugenie and Sanjay have said. But the general thinking, and I can tell you because we in government have to take the entire perspective in mind. The general thinking is that rough diamonds come in duty free, and India is a hub for cutting and polishing of diamonds, where 92% of the 92% of the diamonds are cut and polished in terms of volume in India. So the need for reduction of duty in cut and polished diamonds, while I appreciate the points raised by all of the panelists, if you really want this to fly, I would say that you have to come up with a very concrete and specific proposal highlighting all the issues as to how India becoming a hub for diamonds, which includes the cut and polished diamonds, and how the reduction, it's not only a question of revenue. I think revenue is one of the angles. Point is, we have to have a very, very convincing agreement from the government perspective, which we can then, you know, move ahead with revenue. So it would really be appreciated if you come up with a concrete proposal.
Sure. Tupaji.
We'll do that.
Thank you.
Now coming to the conclusion, I would like to say that this was a very, very interesting discussion, and I'm happy to know that situation is improving, and market position demand is improving, and prices are holding, and all the major diamond companies and some of our major diamond players are looking at a brighter future, because it was always felt that with this disruption of supply chain due to COVID, one of the major areas which have been affected, and which you can see all across the spectrum, is the luxury and retail, high-end retail sector, and diamonds come in that category. So while demand is taking a bit of time to pick up, and let's hope it's a V-shaped recovery and not a U-shaped recovery, but the demand for apparels is also facing a lot of problems. Demand for luxury products like diamonds would take time. So I'm happy to see that people are looking at a much more optimistic scenario, and let's hope that this continues, and because the overall scenario also helps in India, and I would again say from the exports point of view. So better market, more demand, more cutting and polishing, more exports, and the economy and the country benefit. Now, while concluding, there are a couple of issues which I would like to mention that, that's obviously from the India specific point of view. One is that, this sector is not very well organized. So, and this was a problem which was faced, I think, during COVID. The more organized sectors in terms of manufacturing were able to better adjust. While this is very labor intensive, there's a huge amount of skills available. We can have a separate discussion on steps being taken, including setting up of common facility centers, which have helped in organizing manufacturing. But I would really say that, take more steps for making the sector more organized. Let along with the front end, the back end also become, let us focus on that, so that the workers who are working in this industry continue, they get all the benefits, they get all the facilities, they continue working in this industry, and this skill dissemination, happens over generations also. Another critical point which I would like to mention is that from the Indian industry's point of view, and obviously from world also, that we need to move up the value chain, where this industry has to look up at products which now cater to meeting the demand of millionaires, and probably tying up with some of the world-renowned retail brands, looking at developing segments such as, other areas such as colored gemstones and silver jewelry, etc. And even for diamonds, looking at lighter jewelry, more contemporary designs, and studded jewelry, which would have demand all across the world, was really the need of the hour. And I would like to also conclude by saying that I would request the industry and the entire community of jewelers to ensure that all transactions are traceable. Credibility is ensured at every level. There's an end-to-end tracking, and there's a faith amongst all the stakeholders, including the banks financing the transactions, the insurance companies giving the coverage, and customers across the world expressing their satisfaction with Indian products and reaffirming their skill for our talented crafters. So this would be my message to the industry, for something to look forward. Once I think they're slowly getting out of the effect of this COVID pandemic, so these should be some of the key areas we should focus. Thank you.
Thanks. Thank you very much for that, Tupaji. Paul, Evgeny?
Just quickly concluding, I think I agree on the need for transparency and reorganization. We've been on that journey with our customers for, I said, a good 5 years and more, and we're very much of belief that the industry needs that to make sure that it's bankable into the future. I think we've been through a number of crises, certainly in my 4 decades within the industry that you mentioned, Colin, and I think one thing this industry does have is tremendous resilience and innovation. Actually, it has the ability to reinvent itself and to make sure we come out of the other side. and I think that will happen again this time. I think we've done actually well to adjust in this period of time. I think it's about a collaboration across the pipeline from retail all the way back to the mines that have been able to find the right way through this. And I think, as I said earlier, looking into the future, we do see some good signs picking up. It won't be a massive V-shaped recovery, but I think the longer term, our product is incredibly desirable, and we should be looking to the future. And I think we should look to that future positively. Thank you.
Thank you. Thank you for those positive words. Kenny?
Yes, thank you, Colin. So I would like to say that from this crisis, we should learn a lot, and we should use this crisis to make our industry more stronger. And already we provided a lot of confidence to the midstream, and we invested a lot for this current balance, and we have to save this, and we as all players, we have to follow not short-term gain strategy, but we have to follow mid-term and long-term strategy. And this will be finally, as a responsible approach, will make the whole industry stronger and better.
Okay, thank you. Sanjay?
This pandemic has shown us the value of our relationship. I think going forward, 100%, people will start valuing each other because it's the unfortunate passing away of a close or known member has put a question mark that, so having said all these things, as an industry, what we should do is that while we focus near term on our individual business, we need to simultaneously work making sure that the message of diamonds remain on the consumer radar. The younger generation needs to be bought into the beauty of diamonds. The trade has to come up with an effective integrated plan. And the lab and natural will have to change the dialogue of their positioning and not disparage each other, but find their unique voice and not at the expense of each other. Diamonds are still desirable for the consumer. Let's make sure our actions cement and enhance that desire.
Okay. So well said, everyone. And I would only end at that note that, what this pandemic has really done. And today is a testament to that it's cut all of us physically from each other. So, Rupaji is in Delhi, you're in Kent, and you're in Russia, Sanjay's in BDB, I'm in Worli. And it's amazing that how all of us have connected so well together, and we're having such candid, frank speak. So that's what maybe this pandemic has done, not only to us, but I guess everyone around us. And what I guess all of us are doing more is we have intensified our bonds with not only, I would say, business relationships, but even all our personal relationships. And, when we emerge from this unusual crisis, I guess there will be a renewed focus on relationships because they mean so much. And what better than diamonds to once again play a crucial role in this ultimate expression of love and celebration of life. So on that happy and positive note, I would like to say thank you, everyone. Thank you for joining us. And from all of us at GJEPC, I guess goodbye and best of luck for the rest of the year. Thank you. Bye.
Thank you. Bye-bye.
Thank you.
Thank you. Stay healthy. Thank you. Bye-bye.
Bye-bye.